Welcome one, welcome all to DeFi Crypto and Airdrops, the DeFi Masterclass edition with Jake from Builder Wealth and David from DeFi University. How's it going, gentlemen?
Doing well, Mike.
You know, it's funny, Mike. We always, whenever you introduce us, it's like you got to check which name I have on today. Is it Builder Wealth? Is it Metrics Finance?
You sensed my hesitation. I was like, what tag is he wearing today? You got Metrics Finance, you got Builder Wealth, you got a couple different pokers in the fire.
Yeah,
Nothing wrong with that.
Good to see everybody today.
Absolutely.
Oh yeah. So no, I mean we've been getting a little bit of positive bullish movement. If it holds, if we see some further upside, that's to be determined. Looks like in the past couple of seconds, let's see what happened. Something went up a little bit. Avalanche got a little bit of life in it, huh? All right. But so yeah, let's go ahead and just dive right in. Oh, actually, real quick, let's do this because I want people to know where to find you. Well, real quick, this is our YouTube channel, DeFi Crypto and Airdrops. Make sure you're following us there. And if you want to find our guests, Jake or David, we got the blockchain report here. That's Jeff, my co-host on Tuesdays and Fridays. He specializes in airdrops. Jake Call, who is obviously on this show. If you want to find his content, a lot of really, really good DeFi content. Breaks it down very easily, very simple to digest. We got the blockchain basement with Drew over there and Discover Crypto. And then we have David over at DeFi University. Just started his channel. If you could, go over there, throw him a follow. And if you want to use some of the really great tools that they have, Jake, if you go to Metrics Finance, link in the description of the channel and each episode, there is a free version that you can use to track your portfolio and to simulate DeFi positions that you are thinking about getting into and get an idea of how profitable that they'll be. And then David over at DeFi University, he has a course and live calls Monday through Friday that can help you on your DeFi journey if you're looking to jumpstart your education into DeFi. So, but let's go ahead and jump into this. All right, we got Big Lou in here, one of the DeFi University alum. Let's see. All right, so before we went live, I know it hasn't have to do with crypto, but I wanted to finish the conversation out of respect for David. He was asking if I thought that Trump was going to invade Venezuela. So there's a lot going on right now. And, to be honest, I kind of ignore Trump. I'm a Trump supporter, but it's anytime that guy opens his mouth or does something, it seems like it negatively impacts crypto. So I put him in timeout. I'm trying not to listen to too much of what he does, but I'm hoping that he doesn't do something like that. I think that there's better ways to deal with the drug trafficking than invading another country. So, but what are we thinking about the markets right now, gentlemen?
I mean, honestly, obviously it's very easy to say we're going back. Bitcoin's going to 120K, yada yada yada, and spew everything, and it could be true. And reality is I think I mentioned this in the live 2 weeks ago because I wasn't here last week, but I feel like there's a lot of stuff that's just going to get left behind. We've seen this huge shakeout within the market. Not only have altcoins basically got completely wrecked, a lot of the altcoins are never going to come back. Frankly, if they had multi-billion-dollar market caps, now they're a 500 million, 400 million market cap. A lot of them will never touch $1 billion again unless they make some pivotal change within their ecosystem. Uniswap realizes that. Why do you think they're working on their new unification proposal where they're doing revenue sharing? Because, of course, they don't want to get left behind, and they see that the market is moving to favor high-quality assets because institutions do not invest based on good marketing. Institutions invest based on data and based on if they are actually running a profitable business or may run a profitable business in the future. So that's what we have.
So wait, Jake, you're telling me that institutions don't invest based on feels?
Man, I mean, maybe the institution of the retail investors.
Yeah, no kidding.
But yeah, exactly. So, I mean, where we're headed as the market, I mean, I think going into 2026, we'll definitely have a little bit of a run. Potentially, I think we're going to continue on up, but there's also some fear that the bottom isn't quite in yet, and that we could continue to retrace. So, eager to hear your thoughts, David.
Yeah, so I am focused keenly on the Fed because with quantitative tightening having ended just 2 days ago, what that means is we're probably about to see the Fed's balance sheet start to expand again. That's some form of quantitative easing. And I've been putting together a lot of research in DeFi University about the Fed and the interbank plumbing, as well as what's going on in Japan, because I think that those are some of the really big drivers. And will continue to be over the next couple of weeks. I mean, look, we got through earnings season, and the majority of S&P items, beat. So I don't think that we're going to see a market crash when S&P companies are seeing their earnings grow. So I don't think it's likely to see a crash. But you guys, there are some really big structural problems in the US Treasury market and in the Japanese bond market. And so those structural problems, the tools that the Fed has can't solve those problems. And so that's really gets into Lynn Alden's "nothing stops this train" idea, where it's the deficit spending, you guys. This deficit spending needs to be monetized, and it looks like the Fed is going to have to monetize it because there are no other buyers. So that's going to be US dollar liquidity additive. But when? When is that QE going to start? It looks like it already started. So last month in November, wasn't there like $125 billion of injection in November?
Well, I believe that what was it, yesterday or the day before was this like scheduled day that they were supposed to be starting the QE or
Yeah, the quantitative easing.
yeah.
Yeah, so QT ended on the
Yeah.
1st, and QE, I think, is about to begin. So that will probably mean number go up. But, you know, um, I don't know that the bottom is in yet for Bitcoin because Bitcoin bounced just below trendline support. So it broke trendline support and moved to 80K, but 80K isn't really a significant level of support at all. It's just kind of no man's land. Like the real support for BTC comes in at like 75K, and the timing around this bounce where the S&P, the Nasdaq, the Russell and Bitcoin bounced just about at the same time after the Fed, the New York Fed, Williams. I don't recall his first name, but Mr. Williams over the New York Fed. Oh, Mr. Williams, how's it going? So what he did was he basically came out and sounded very dovish. So most of the FOMC governors, they have not been sounding very dovish. They've actually sounded pretty hawkish. But the New York Fed has a permanent voting seat. And so it's really important what the chair of the New York Fed has to say. So when Williams came out and sounded like a dove, everything bounced. And, is the jawboning going to be enough? At the end of the day, there needs to be like actual dollars behind it. So people are next week during the FOMC meeting, which I believe begins a week from today, we're not only going to get a 25 basis point rate cut that's already priced, but we're also going to get some clarity into what it is that Fed Chair Powell has to say. I think that his presser a week from today is going to be super important. So there's a couple of things that I think about here. Number one, the S&P and the Nasdaq, they're not likely to crash when the underlying components are seeing big earnings growth, okay? So EPS growth does not mean markets crash. So that's number one. Number two, we had this big shutdown where the TGA, the Treasury General Account, couldn't spend. It was like a liquidity drain. And so the Fed had to step in November and inject $125 billion. We saw Bitcoin, which is, I think, a great measure of overall liquidity conditions, just sell off from 126K to 80K. But now that it's bounced, and it bounced almost in sympathy with the S&P and the Nasdaq after Fed chair, the Fed, New York Fed Williams came out and spoke. It just seems to me that the bottom is probably not yet in,
Mhm.
unless the Fed next week comes out and says, "Hey, you know what? We're going to start buying $100 billion a month of bonds now, like we did in 2008 or whatever." So if all of a sudden the QE bazooka arrives, well, then markets probably levitate higher. Here's
Mm.
something to think about, though, you guys. What if they announce some type of bond purchases? They announce QE, but it's not enough. So let's say that the market thinks that the number needs to be $30 billion a month of bond purchases. But the Fed comes out and says, hey, you know what? We're going to buy $15 billion a month. Well, that would mean there is QE, but it's not what the market wants. So stocks move lower. So that's a potential problem. Another big potential problem is what's going on in Japan. So you guys remember that yen carry trade unwind in August of 2024 when everything moved lower quickly? It was like basically a flash crash. Well,
Mhm.
in Japan, they have look, they're several decades further along this path than we are in the United States, this path of fiscal dominance, where in Japan, the new prime minister wants to rebuild the military and give out $100 billion of free stuff to the population. In order to be able to do that, they need to fund that by selling debt. But there's no one that wants to buy Japanese paper because the Bank of Japan owns more than half of the Japanese bond market. And so what you're seeing is investors are demanding that they get paid more to lend to the Japanese government. That's pushing Japanese bond yields up sharply to the
Mm.
highest levels that we've seen in decades, if not all-time highs, for many of these bonds. So that's basically telling me that hey, there's a revolt. Bond vigilantes are out in force in Japan, and at a certain point, the Japanese institutions are going to start to repatriate capital, because if yields on long dated Japanese paper get close to those of U.S. 30-year bonds, or even if the 10-year Japanese note, if that yield gets close to the yield on the U.S. 10-year, then I think you would see a massive repatriation of capital back into Japan. In order for that to happen, Japanese investors or international investors who borrowed in yen to buy assets in dollars, they would have to sell those US dollar denominated assets. So if Japanese or international investors borrowed in yen and bought US treasuries, they would have to sell those treasuries. So I think watching yields on Japanese bonds is a really good idea here, because that's the type of thing where it doesn't matter until it really matters.
Mhm.
Like in August of 2024, it didn't matter until all of a sudden the Bank of Japan started hiking rates, and that blew up the first tranche of that carry. So I think that we could be about to see another tantrum over Japanese yields. So look, with QE is starting not because of something good. Like quantitative easing is restarting because the Fed has literally no choice but to restart QE. Now,
Yeah.
why do they have no choice? Well, because the buyer of treasuries on the margin is like
Japan.
a dozen. No, it's actually not. It's like a dozen hedge funds in the Cayman Islands, collectively referred to as the Cayman whale. And what these guys are doing is they're running a multi-trillion-dollar basis trade in aggregate, and they are the demand for treasuries at the margin. And so the way that they're running this is, if I'm a hedge fund in the Cayman Islands, right, and I've got a prime brokerage account, I've got a relationship with a prime broker like Goldman or whatever. So Goldman will extend to me a line of credit, and it's called a zero haircut loan. So if I'm the hedge fund in the Cayman Islands, I can get essentially free money from my prime broker, which I then use to buy treasuries. I take those treasuries, I post them as collateral in the reverse repo facility at the Fed, and then I instantly borrow cash against them. And this is overnight. I take that cash and I get short futures against those treasuries, and I collect what's called a basis. And so I'm able to do that on 50 or 100x leverage and make a ton of money. But what happens when those underlying assets, those US treasuries, start to become volatile? Well, if I used 50 or 100x leverage, then a little bit of volatility means big, big problems. And because I didn't put up any initial margin to buy those treasuries in the first place, who incurs losses? Well, if I'm the hedge fund, the person or entity that incurs losses is my counterparty, the banks, my prime broker. So if Goldman Sachs gave me $100 billion in credit and I went out and I bought $100 billion of treasuries or $1 trillion of treasuries on leverage, and then there's a small move or volatility of the underlying treasury starts to increase, well, hey, you know what? I'm going to have to unwind the position. And because the size of this, it's like $1.4 trillion, this basis trade, which means that's $1.4 trillion in demand for US treasuries that if it were to be removed, well, who's going to fill that hole? The Fed. That's the only buyer of last resort. They will have to make a market for treasuries. Now, this is really, really bad because this means what's the escape valve for all of this inflation? Well, it's the US dollar. And we've already seen what happened to Japan. They're several decades further down this fiscal dominance loop than we are. So look at the Japanese yen. It's basically toilet paper. That's what's going to happen to the US dollar if we don't get this deficit spending under control. And unfortunately, it looks like there's no political will to cut this deficit by reducing entitlement spending. And, there's no reason for the US military to be spending $10,000 for a fucking bolt, bro. Like, it's, military contractors charge the government ridiculous prices for stuff. So there's a ton of bloat.
Well, I mean,
Yeah.
that can be said about anything
Oh,
that the
for
government
sure. For sure. No,
controls. 'Cause, I mean,
absolutely.
they know that
Absolutely.
they have no problem stroking a check because it's not their money.
Right. Right. Well, so, but Mike, what I'm getting at here is the budget. This could be solved, man. Like we don't need to be going down this death spiral where the
They
dollar
don't want it
hyperinflates.
solved. The money that they're spending is, I mean, they're funnel. It's basically they're funneling it. It's kind of like what the what's happening with FTX. All the money that was getting funneled from there to to politicians and their little pet projects and things like that. It's basically the Democrats and Republicans both do it. They just have different people they funnel money to. I actually did a show with Drew where we did a deep dive on USAID and where all that money was going to NGOs, where you have all these NGOs and it was all supposed to be for climate. And I did a deep dive into each one of them, and a couple of them, they were being run by ex-Weather Underground. I mean, we're probably going to get banned for this, but I don't care. And basically, they were these organizations were the ones that were funding uh, the 8 months of love and hope that we saw in the streets while the BLM movement was going on.
Oh, you're talking about the mostly peaceful
Yes,
riots, right?
yes,
Look,
yes.
so Mike, look, we burned the house down, but we were mostly peaceful about it. Okay.
Oh yeah,
So,
no, it was done in a very mostly peaceful way.
Very yeah, amicable.
yeah.
So no, but it's I mean it's all of them. I mean it's not just the left, it's not just the right. It's all
But
of
we got to be clear though, it's mostly on one side, mostly on the
it.
left though.
Well, I mean it could be argued that the Republicans with the military, and I'm a retired military veteran, and it's they love funneling money to the military because you got Boeing, you got Blackwater, what is it? I'm drawing a blank right now. I have BlackRock on the brain, but
Blackwater, the private military contractor.
yeah, there's
Didn't
just
they-
all the private military
Yeah,
contractors. When I was
yeah.
deployed, we had basically their people, over there. They had contracts to feed us in the chow halls and to do all the truck driving and all that stuff. When the taxpayers paid to train people to cook for us and to drive our trucks, make it
It's
make sense.
it's a grift. It's a grift,
It
Mike.
is. All of it
It
is.
definitely is. And the problem is that we've got $38 trillion in debt now. And
Mhm.
Yeah.
so that
Actually, I
debt,
think we hit 39.
30, dude, that's fucking nuts, man. Like the thing that I think Elon Musk was so upset about was the lack of desire to actually address this
Yeah.
problem.
No, he
Like,
he was all excited about finding it, thinking that it was going to get fixed, and then nothing was
yeah.
getting fixed. And
Well, I
so he was
mean,
like, "Screw this, I'm out."
yeah, because like the result of quantitative easing this time around. So, we had the first tranche of QE back in 2008, and then, we've had multiple tranches of QE over the last couple of decades.
Okay,
But
we're not quite there yet. We're at 38.433 trillion. we're
I mean,
we're
dude,
a half a trillion away.
so when you zoom out and you look at this stuff, if the US Treasury system were a DApp, right? If the tokenomics for the Treasury system, US Treasury system, were a DApp tokenomics, dude, I would run in the opposite direction. These are horrible tokenomics,
Oh
man.
yeah.
Like this makes no sense. Like it
Oh,
will
dude,
what
if our government was a business, it would have been out of business a long time ago.
We should just put a tax on every credit card transaction, a 1% that goes to pay down the national debt.
So, that it's interesting you say that, Jake, because there are different schools of thought around how to fix this problem. And I honestly, I tend to disagree with the idea of using taxes to drive more revenue, because I think that, people who are actually productive, when taxes start to rise, they vote with their feet and leave those high tax jurisdictions. So I think that as taxes rise, it actually drives less tax revenue. Counterintuitively, I think you might believe that to be true. But look, I don't think that raising taxes is a way to solve
Oh
this.
Yeah, not
I
at
no,
all.
I
it's
think I,
it's like everything else. We need to cut spending. We need to cut the cost. I mean, healthcare. It doesn't do any good for the government to subsidize or to give universal healthcare if the cost of an aspirin is like $100 or $20.
right,
It's
right.
you need to address the underlying cost of all these things. Before. And I personally don't think the government should be funding anything. I mean, that's what initially destroyed the cost of healthcare was insurance companies and lobbyists in Washington. And then you got same thing with education. It's when the government started giving out student loans,
Right.
then all the universities said, "Oh, the government's going to be backing these loans.
So
We're
we
just going
can
to jack
raise
up
our
the tuition. We're going to jack
prices.
up the costs."
Exactly.
And now you got people, they're drowning in hundreds of thousands of dollars of debt for degrees that they can't even find a job,
Right.
to can pay for them.
It's like, Mike, imagine if you went to a university and you took out $100,000 in loans to get a gender studies degree. Like
Oh yeah.
that type of thing, you shouldn't even be able to
Well,
do that, because like
they
if
shouldn't
there's
be able to
no
get a loan to get that crappy degree,
right,
knowing that. I mean, you got to think of it as like you're giving a loan to a small business. Like Jake,
exactly,
if he wanted to start one of his businesses and he went in there to the bank and was like, "Hey, I'd like to get a loan to start a business," they're gonna be like, "All right, well, we need to see, do you have any experience doing this? Do you have this? Do you have this? Do you have this?"
Yeah.
And they're going to ask a bunch of questions to make sure it's a sound investment.
I have a friend that student loans are so easy to get. Friend that got student loans and basically funneled all the student loan money into his own business, and then he, you know what I mean. So he gets these Like they just gave him money, and he's like, okay, boom, and then
Yeah.
it's like one class instead of however many. It's crazy, the things that student loans do. One of the things I wanted to talk about though is the amount of money that was spent on Black Friday, and more specifically, the amount of money that was financed on Black Friday. There was
Right, right.
$11.8 billion spent, and this is Friday alone. This does not include Cyber Monday. This does not include Thursday. Thursday, there was $6 billion in Thanksgiving. So let's just look at Friday, though. $11.8 billion in spend. And then 95% of that was financed. Now, let's define financed. Finance means anything like a credit card, buy now, pay later, a line of credit, right? Any type of financing. But a lot of customers purchase with a credit card, and it's safe to say, at least with myself, I use credit cards. I get my points and then I go pay them off at the end of each month.
Mhm.
I don't really carry debt on them. I don't really carry much debt at all. But yeah, so that's one thing. But then the other thing is buy now, pay laters, which is the worst type of debt that you can have on your profile. And this is what any type of lender will tell you: buy now, pay later is the worst type of debt. Had a 10% increase from last year, but more importantly, made up for about 12% of overall Black Friday. So not 12% of the 95%, 12% of overall Black Friday sales, which is $11.8 billion, meaning that you had over $1 billion flow through buy now, pay later solutions on Friday alone. And that just kind of goes to show where we're currently at in the economy.
Yeah.
Because while
Yeah.
we're having the biggest days ever with shopping, you have to keep in mind everything's more expensive now. So of course
Yeah.
we're going to have bigger dollar days because of course there's more dollars in circulation. But not to mention the amount of money that's being financed, not just through credit cards, but also through buy now, pay later solutions is significantly higher. And then I think on top of that, I don't know the exact number, but I think it's like 65% of people don't
I
pay
love it, bro.
credit cards every single month. You know what I mean? So
Yeah.
you're looking at a total of 65 plus 12, which is basically 77 percent of $11 billion that was transacted being completely financed and is not going to get paid off within 30 days. So
Mhm.
that right there should show you where our economy is currently at and where consumers are currently at. And I know it firsthand because I see it firsthand. People at the grocery store, like whipping out their food stamps or like having to take something off or telling their kid no because they can't afford it. So a lot of people think, and I think it's just a lot of crypto investors, because I'd like to say a lot of crypto investors are a little bit more well off. Um, and again, define that as you may, but like, there's not a lot of broke people holding crypto, to be quite frank. But like, there's a lot of just overall, I guess, like people that can't afford things overall. And it really goes to show where we're headed with the economy.
Mhm.
And then the other thing that I was going to say, we're not really relating to that, but relating to the overall crypto market, is Wintermute, right?
Mhm.
Wintermute is the guy with the little strings controlling the crypto
Yeah.
market right now. The
Yeah.
crypto market's the puppet, and he's like, we're going up, we're
So,
going down.
Jake, are they just the market maker for Binance, or are they like for everyone, like a
I
big?
I don't know entirely, but what I do know is that I think they have ties with Coinbase and Kraken and some of these other guys too, because what's happening is you can see it publicly. They're creating these huge crashes in the market, and these huge crashes are causing huge amounts of liquidations because so many people are leveraged up right now or levered up. So create crash by selling off, more sell-offs because there's forced liquidations at key levels, right? Which causes retail to go and sell off even more, and then start buying again, pump up the price,
Ah,
start the price going back up, right? That liquidates all the people that are now short on the market, right? And they're making their money, and then obviously retail buys in and everything like that and pumps the price even higher, and then rinse and repeat the process. You know what I mean? So it's like, that's what we're seeing in the market. It's been proven. It's all on chain. That's the beauty of crypto, not just DeFi, crypto. Everything's on chain. Um, so you can clearly see what's happening in these markets, and I really just think that, uh, yeah, I mean, it's only a matter of time, obviously, before we go back up. But we have to play with these players if we want to be able to make money, or we have to throw it in an account and don't touch it basically for however many
Well,
years, you know.
I looked it up. Surprise, surprise. Wintermute works with BlackRock for
No
liquidity
way.
and institutional collaboration on liquidity initiatives, including over-the-counter trading and
Oh,
market making for tokenized assets, leveraging Wintermute's role in mainstream finance integration.
interesting.
Oh, it's surprise, surprise.
Yeah. Well, it's not just Wintermute that, to the question in the chat, not just Wintermute that's doing this. It's literally every company in conjunction. And you know why? Because they might be competitors, but they all have the same exact interest. They all say,
Yeah,
hey, if we all sell at the same time, and the market crashes XYZ, then we know that retail, like the concept's been proven. We know retail is going to sell off. We know money's
yeah,
going to be liquidated, and then we'll be able to buy back in at lower prices. So it's like, well, they might all have competing businesses. This other thing that they're doing, which is elaborate scheme, you can call it, is ultimately something that's going to make them a boatload of money off of what they already have, basically. Not to mention, Coinbase revenues are at all-time highs. Why? Because crypto interest, retail interest is growing, don't get me wrong, but also, regardless of if your portfolio is doing well, Coinbase's coin stock is doing pretty damn well because you're buying and you're paying 3%, and then you're going and you're selling and you're paying another 3% if you use Coinbase. I mean that you are paying real estate commission on your crypto. And
yeah,
top of that, you are earning 90% lower than what you can earn through a liquidity pool strategy or something like that. And guess what? You go and you say, I'm going to stake my Ethereum, get my measly 2% on it, and they lock you up for 41 days. And then by the time you're ready to sell, you're still holding. You know what I mean? And you're in that unstaking period, and you can't get out. So you keep on holding, and you're like, okay, at this point, I might as well start dollar cost averaging again. I might start buying again, and it repeats the process. So
well,
overall, just a lot of manipulation to take into account, and yeah.
Do you guys
Well,
think that?
and me and you, Jake, we mentioned this before. I mean, for the most part, all I use Coinbase for is to onboard my dirty fiat because I can buy USDC for free and I can send it for free. I mean,
Mhm.
the USDC isn't free, but there's no fees.
Yeah.
So basically, I that's all I use Coinbase for, and then after that, I send it and it goes to my my DeFi wallets, and that's what I do my DeFi with. So basically, I just use it for all. But you're 100% right. Most people, they're gonna buy their crypto on there. They're gonna do everything on there, and that's what Coinbase wants because that's how they're generating their fees and earning their revenue.
Yeah. Well, I have some to share on screen as well, Mike. I
Yeah.
just got those numbers from the holiday spin. So it's actually even worse than we thought. It was $11.8 billion on Black Friday, but it was $14.25 billion on Cyber Monday. Um, and then you can look at the specific categories, majority of it being clothes and electronics. And you can look at all the discounts. And one thing that I wanted to note from a consumer standpoint, right? Does anybody else remember maybe 2 years ago when Black Friday was an entire month and when literally you were getting deals on day one,
Yeah,
right?
me
Like
too. Yeah.
we didn't really see that this time, and the simple reason why is because that doesn't work anymore. Like people know the BS and the shit that these companies spew, and they know the tricks where they raise the price and they drop them on Black Friday. People know this by now, right? So I think we're also starting to see, and the other thing is the discounts this time of year were not that good compared to what you would get like back in 2015, 2016, 2018, right? Um, I think what we're starting to see is a little bit of a reset with commerce, e-commerce, and commerce because of obviously rising cost because tariffs, rising cost for cost of goods and stuff like that. Also, the economy just leading to general rising costs with product, and companies trying to somewhat control that without passing it in its entirety onto consumers. They can't afford to discount as much anymore. But what will hopefully happen is as the economy eases up over time, perhaps prices will continue to rise a little bit, but also perhaps cost of goods will continue to fall or start to fall, I should say. And then from there, that's where you get back to the cycle where you have actually good Black Friday discounts, Cyber Monday discounts, and everything. And then maybe you have people lining up outside of Best Buy again, like they
So,
used to.
so Jake, I'm curious, what does this tell you about the bifurcation taking place, for the American consumer? because you've got, the people at the very top where, hey, you know what? Like, it doesn't matter the prices went up, because if you're making $100,000 a month, then it doesn't matter that the TV is more expensive. But if you're going from paycheck to paycheck and just struggling to pay rent and buy food, then, and that's the majority of the country.
Yeah.
So, does this matter for markets? Because if markets are driven by, Fed liquidity, and we see, the leading companies, their earnings are growing,
Mhm.
and, does this actually matter? Does this Main Street stuff actually matter? What do you think?
There's always an effect, and that effect is, interest. It's eyeballs at the end of the day. And not to mention, it's also the, as we discussed, Wintermute and these other companies, there's a retail aspect to it. And, what do we define retail as? Because again, like with this, you could have very high ticket items that are processed through this. You could have multi-$100,000 items, multi-million-dollar items that are included in this number. So we have to keep that in mind as well. There's
Jake,
always,
I'm sorry, let me interrupt you for a second. Can you imagine going to a Ferrari dealership and buying a Ferrari, like using Klarna or
oh
something?
oh my gosh, it'd be wild. But yeah, and another reason why we saw like increase in buy now pay later options is because obviously it's becoming a bigger business model, but it's also a riskier business model. Like there's I forget the study, but like one of these companies basically had to get acquired. I think it was Afterpay, because they had so many customers default. You know what I mean? And nobody was paying it off, because when they've made this so easy and they've made it so silly to the point where people don't even think they're taking on debt. And there's a lot of people that are like, oh, I'll just stop paying this or whatever, or oh, I'll just cancel the card, or I'm not going to do this, whatever. And it's these little transactions. Oh, they're not going to come after me, yada yada yada. Guys, my car, I didn't cancel my gym membership from 6 months ago, and my card, I had got a new one because it expired, and I'm getting debt collectors calling me saying you have $175 in debt that you have to pay, and I'm like, I'm not paying that. I'm sorry. I didn't go to the gym once in the past 6 months. Not that gym. I have one at my apartment. But yeah, I'm like, I'm not going to pay that. Whatever. But yeah, another thing is they have made it so damn easy to buy stuff. Like when you go on Amazon, when you make a delivery and you go to another product, there is a one-click checkout to say add to Friday's delivery, add to Thursday's delivery. One
Yeah.
click. No, it doesn't say how much taxes, doesn't say anything. It just says, would you like to add this to your delivery? And there's a first, when you first use the feature, an authorization, say yes. And then after that, all you have to do is click a button. With Alexa, stop. I have one. It's going to trigger it. You can ask it to buy you something. It will buy you
You're like Alexa. You like start saying a bunch of stuff, and next thing you know, next Friday you're gonna get like this massive shipment of stuff.
buy a TV. Yeah, they made it so easy. With AI, you can check out directly through ChatGPT, like by simply just saying stuff. So it's gotten so easy to be able to buy stuff that it's contributing to why the average consumer has no money and is living paycheck to paycheck, because of this simple reason.
I think that this is definitely one of the reasons, but if I just zoom out and I think about the monetary landscape since 2008, I really believe that the reason why the majority of the country is underwater like this is because our money is fundamentally broken.
Hmm.
If you've got, since 2020, 40% price inflation, but your wages have grown by 10%, well, guess what? You're underwater. And I think that with this next round of QE, we could see that just continue to widen. So if there's more price inflation and wages continue to not keep pace, at a certain point, like, what's the point of even going to work? Like, if you're making $3,000 a month and you can't pay your rent and buy food now, well, if the Fed starts buying $100 billion a month of bonds and we see inflation continue to pick up and move to the upside again, well, then, okay, you earn $3,000 that month, but your rent's going to go up. All your bills are going to go up. Your health care is going to go up. Your gas is going to go up. buying food is going to become more expensive. Literally everything. Like it's impossible to get to break even if the
Oh, I was
currency is broken.
actually I forget where I heard it. It was like yesterday or day before, and they were talking about what used to be considered the poverty level, and it used to be like 30 something grand, not too long ago. And now, a family of four, they're saying that like you can be into the six figures. Like it was like I think it was like 120 something $1,000 that you can make per year, and now be considered poverty level
Well,
because
it
of
makes perfect sense, right, Mike?
Yeah.
Makes
yeah.
because let's say you're making 100 grand a year, okay? Just or let's make it 130, okay? Just to keep the math easy. So
Hmm.
you're making 130, living in California, let's say.
Oh, good God, yeah.
So let's say after taxes, you keep half. So you're working for the state for 6 months out of the year. Just let
Yeah.
that sink in for a second. Okay, so you keep half of what
Actually,
you.
real
Yeah,
quick, I saw something else. I don't want to interrupt you for too long, but
yeah.
and I don't know if it was true, but I guess in ancient Egypt, the slaves were taxed 20% of their harvest to the pharaoh. So basically, we're paying more taxes than slaves in ancient Egypt. So sorry, go ahead.
Yeah, and the money is printed, so it doesn't make any sense. Like, why? It doesn't make any sense. But let's say that you make 130 and you keep half. You live in California, so you keep half. So you've got 65K. That's just a little bit more than $5,000 a month. But you're not taking care of just yourself. You've got a wife and you've got two kids. Okay, so your two kids need childcare and healthcare. Your wife needs healthcare, health insurance. You need health insurance. You got to pay rent. You've got to buy food for yourself and your family. You got to make sure that you pay insurance for your vehicle. You got a car payment for your car. And you've only got $5,100 a month to take care of all of this. Okay. So good fucking luck.
That
No
you're not
wonder.
going to be able to pay a mortgage with $5,100 in
Dude, like
California.
you can't. So let's say that you're able to get a house for $2,000 a month, which is basically in California, you're going to be in a shack next to some homeless people. Okay, like maybe not that bad, but like 2K a month, you'll be lucky to find a place that you can house four people in for that amount of money. Let's
Yeah.
say you're able to do it. Okay, that's right there. If you got $5,000 each month, that's two gone. You got 3K left. Okay, you got to pay a car payment and insurance on the car. All right, let's say that's $400 a month. All right, so now you got $2,600 left. Well, you've got to buy food for yourself and your wife and your two kids. So, okay, how much is that? $1,500 a month, maybe? So now you've got what, $1,000 left? You got to pay for health insurance. Health insurance, I don't know if you guys have seen it, but it's like the premiums are absolutely insane. And the product that you get is very poor quality.
Yeah.
So, like, okay, that means basically you can't have health insurance. Um, and then you've got $1,000 left. So, like, what do you do, like, to entertain like, take care of your family so that, like, you're not just sitting in a box and working all day and that's all you do? Like,
Yeah.
how do you have fun or do anything? Like, and what happens if there's some type of an emergency and you're living paycheck to paycheck, you've got nothing saved, and then all of a sudden, something horrible happens and you've got to come up with $5,000 or even $500. Most people can't do it.
Mhm.
So, like, man, I think it comes down to the money. I think our money is broken.
It is.
Yeah.
Yeah.
And David, you know what I like to say? It's not your fault, but it is your responsibility.
Yeah.
At the end of the day, you were spawned into this country. You appeared here. Maybe you decided to move here. Not sure why, um, but like it's your responsibility to do something about it, and that's why I strongly believe in like building something and doing something for yourself. And I think we can
Yes.
all agree
Yeah.
here. Like working the traditional 9 to 5, it's only going to get you so far. And, let alone eventually you're 65 years old, you want to retire, right? Will there be Social Security? Who knows, right? At this point, will your retirement be enough? Who knows? What if you're 50 years old and you only have $100,000 in retirement because you've been living like this for however long? What are you going to do when you're 65? You don't have you can't put away enough money through the traditional methods in
I'll tell
order
you what I'm doing
to
in
be able to.
retirement.
You're going to start robbing banks, is what you're going to
Yeah.
start doing.
Well, well, dude, there's instances where elderly have gone and done stuff like that to get thrown into jail because they get health care, they get food, they get a warm place to sleep because they had no other option. I mean, it's sad.
Mhm.
And I know that, I mean, I've been retired for since I was 40, so 10 years now. And if I had a mortgage or had to pay rent, I wouldn't be, without DeFi and with, some of the other things I have going on, without any of that, I wouldn't be retired right now. I couldn't afford it. It's,
Yeah.
thank goodness I, invested well and, I have I have no debt. Everything's paid off and I found DeFi and, make a little bit of extra money off that. And I have a couple other pokers in the fire where I have money, trickling in. And I live pretty well, but I'm a single guy, no kids. I mean, if I had kids and a wife and needed to worry about healthcare and I didn't have my military retirement and had debt, I don't know how people are doing it. I honestly don't. And it's what really inspires me to do this channel is to try to help educate people and show them a way to break out of that mentality of punching a clock, going to a job, working a 9 to 5, making just enough to get by, but never enough to get ahead.
Mhm.
I grew up like that.
And well,
Watching,
that's how it's designed. That's the
yeah,
thing.
the
And
hamster wheel.
somebody said, country is wealthier than ever, but 97% has gone to the top 3%. It's
Mhm.
like we're seeing a wealth transfer right now, but it's the same wealth transfer that's been repeated. The rich get richer and the poor get poorer. And unless you do something about it, unless you literally like jump outside of your comfort zone and start a business, start investing into a risky industry, because we could consider this a risky industry. Start,
Oh, for sure.
um, just taking risk in life. You will not get ahead. Like you will continue to stay where you were at and be reliant because that's just how it works and that's how they want
Jake, you're so right, man. You're so right. Like you literally have no choice but to take risk. It's
Yeah.
either remain a slave for the rest of your life or take risk and maybe it'll work out. If you're lucky and you work your ass off, maybe it'll work out. Probably won't. But you don't have a choice though. That's the thing. And this is how risky life is. I stole this from Jim Rohn. Life is so risky that you don't get out of it alive. So,
Oh
you know,
shit.
what are you going to do? You got to,
Got my notification.
oh, you got to vote, right? Yeah.
Yep. Yep. Everybody
Yeah.
out there, if you got your arrow locks, don't forget to vote. But go ahead, keep
Yeah.
going.
So,
I'll do
but
it in the
I'm just
background.
thinking to myself, look, these things are all true. Our money is broken. People are struggling. Things seem to be getting worse for most Americans in terms of like, affordability or whatever. But what does this mean for markets? What does this mean for the price of Bitcoin, Ethereum, our other favorite digital assets? What does this mean for, the indices that we follow, the S&P 500, the Nasdaq, the Russell? What does all this mean? Well, I think it probably means, over the next year, number go up because the only response to this is to print. And, I was thinking about this the other day. Do you guys, in 2016, after Trump was elected the first time, I remember I was tracking, and don't ask me why, but it just popped up on my screen. I was tracking the Venezuelan stock market. It's called the Bovespa. So back in 2016, I started tracking the Bovespa. And what I didn't understand then, but I understand now, is the Bovespa did nothing but go up. All it did was go up. And if you go on TradingView and you type in Bovespa and you bring up a chart, what you'll see is the Venezuelan stock market has done nothing but go up. Now ask yourself why. Is it because those companies in Venezuela are just continuing to generate more value for shareholders and their share prices are increasing? Is it that? Or is it that the denominator in the equation, what is it, the Venezuelan whatever dollar or real, is it more likely that the denominator is going to
Property and
zero?
peso.
Whatever it is, man. So I think it's the denominator is going to zero, not that those companies are becoming more valuable. So when I think about it in that way, and then I look at the S&P 500 priced in US dollars, all of those companies, well, the companies are definitely growing their earnings per share, but they're doing that at the same time that the denominator, the currency that they're all priced in, is becoming less valuable. So if there's another round of QE and it's really, really big, well, that probably means that everything goes up simply because the denominator, the unit of account, the US dollar, goes down. And what does that mean for the people that we're talking about at the very bottom? And like most people are not in the top 1%. We're talking about the vast majority of Americans. What it means is, you know, more purchases on credit, more buy now, pay later. And it's so awful because when you learn about what a great deal people who are, have no job or are here illegally get in, especially, anywhere, but especially in blue states. I can speak to California specifically. The deal that you get as an illegal migrant or someone unemployed in California,
It's better. They're better off.
you're way better off being unemployed or being here illegal than you are working a job making, 60K a year. Like, let that sink in for a second. So here's why. And I can tell you in Contra Costa County how this works. So let's say that you're an illegal migrant in Contra Costa County in California, in the United States. The first thing that's going to happen is when you go to a hospital, okay, you're going to get a Medi-Cal ID. And that Medi-Cal ID is almost like a back door into getting a social security number. And so after you got the Medi-Cal ID, then you're issued a social. Okay. And remember, these are people who are here illegally. So they're
Yeah.
not citizens, and yet they get a social. After you've got a social, then you can get GA, government assistance, which is like $600 a month. You can get food stamps, which is, depending on how many children are in your household, can be between $300 a month and $3,000 a month, or maybe even more. So you get government assistance, which is just cash aid. You get food stamps to buy all your food. You can get housing assistance up to a couple $1,000s a month. You can get, transportation assistance. And all of these benefits are given to you, the illegal migrant, but you never paid into the system ever.
Well, and the sad thing is it's being paid for by people that are scraping to get by.
Exactly, who don't qualify for these benefits
Yeah.
either. So, in order to be disqualified from these programs, last I checked, the limit was like $1,500 a month or something like that. So, if you make more than $1,500 a month, you don't even qualify for many of these programs, which means that, like, if you're making three
Pays before.
Bro, it's like if you're struggling and you're working your ass off at a job that you hate and you don't get free healthcare, you don't get food stamps, you don't get your rent paid for by the state, you don't get transportation assistance, and you don't get some cash in your pocket every month paid for by the state because you don't qualify for those
Oh
programs.
no,
Dude, that would
fix that statement. It's not paid for by the state.
it's the taxpayers,
It's
right? Yeah.
it's stolen by the state, and
Yes.
then
No, I agree, Mike. You're right. You're right. So it's just like, there are some problems here, man. There are some really big problems. But what does it mean for markets, though? I think it probably means number go up. I think
well,
that's what it probably means.
let's dissect that a bit. We have a little bit of time left. I wonder if it does mean markets go up because if nobody in retail has money anymore to invest in these markets, it's just going to be more and more dominated and manipulated by big money. So, at what point are they incentivized for price to go up? I mean, they've been incentivized for to keep the price down because now that there's the regulation being drafted and passed and all of that, they're able to legally get into it. So they're stacking their bags. You can look at the data. They're stacking ETH, they're stacking Bitcoin, they're stacking. But at what point, and I'm asking, each of you, and Jake, if you could go first, what do you think is going to be the catalyst that is going to be where BlackRock and those institutions are going to say, all right, let's let the price go up.
When the retail, or sorry, the manipulation of retail investors starts to fatigue, because it will. That's the catalyst, I would say, Mike. Because when all of a sudden they realize, oh well, our old trick in the book no longer works, like, and retail stops feeling like this, then then that's where market starts to go up, and now they're like, okay, well maybe we should start to whatever you call it, let the price start to go up. But yeah, the truth is, this is how most retail investors feel. It's over. We're back. We're so back. It's over. And then we have another funny one to share. Are you winning?
Big Daddy Trump coming
Yeah,
in the room, checking on us.
yeah. But yeah, that's in response. These Watcher Guru Bitcoin tweeted, or Bitcoin's at 94,000 now. So, but go
Yeah,
ahead, Dave.
man. Yeah, I mean, look, I love these memes. I think probably what matters most right now is what Fed Chair Powell sounds like during his presser a week from today. I think that's probably the most important thing out there,
Mm,
in terms of like a catalyst for markets. As we've been speaking today, Bitcoin has rallied a little bit, but Ethereum has been running higher,
Yeah,
sitting at some resistance right now, right below 3,200. So, I mean, look, is the bottom in yet? I don't think it is. I still don't think it is. Um, are we, seasonally, do we usually see some type of Santa Claus rally? Well, it depends on who you ask. And a lot of the time, that Santa Claus rally can come in the first couple weeks of January. But,
mm,
we'll see what happens. Um, the S&P and the Nasdaq and the Russell have rallied from being off 6% in November, so they've definitely rallied back. But if they rallied because of the anticipation of getting a cut at this next Fed meeting, well, that's already priced.
yeah.
So if Powell sounds hawkish next Wednesday, then that would be a great catalyst for markets to sell off a little bit. Um,
Man.
so, yeah, I don't know, man. I think 75K is solid support for Bitcoin, um, and Ethereum. Probably the lows that we plumbed over the last couple of weeks around 2,600. It's probably some support, but you know. The levels that would need to be broken for me on the upside, for me to say, hey, you know what, the bottom is in. Let's talk about Bitcoin for a second. Those levels are much higher than where we're currently trading. So Bitcoin's at, let's call it 94K. So the first level that Bitcoin needs to close above and hold above is 94.5. So that's the first level. The
Mm,
second level is 100K, big psychological level. So that's an important level also. But then it's the 200-day moving average, which is all the way up at 109, 109 and a half. So
mm,
that's a long ways away from where Bitcoin is right now at 93.9. So basically, like, Bitcoin's got a lot of work to do. Its work is cut out for it. But hey, you know what? If we're going to see some massive QE this time around, I think Bitcoin would be the first asset to sniff that out. So we'll see what happens. But do I think the lows are in yet? I don't. I don't.
I would tend to agree. I don't think the I don't think we're there yet. And I don't know, me personally, my closing thoughts is, and I think that pretty much everybody can agree, that kind of understands what's going on, is this is the first cycle where we've had institutions and big money for the most part. And I really think that the kind of price action that we're used to is a thing of the past.
yeah,
The big swings up, the big swings down. I mean, there's still going to be volatility, absolutely, but I don't think that we're going to have the same timeline that we've had in the past, because I think it was driven by retail, and you had a lot of the big players that were before Wintermute and all them, that were actually manipulating the market but now you have a lot more money that is involved, and they are looking at the long term. They're looking at actual utility, not vaporware, not what's being hyped on social media. They're looking for the next Amazon. They're looking for the next Nvidia. That's the crypto projects they're looking for and that they're investing in and building with.
Mhm.
So, and I could be wrong, but that's just where my head's at. Is I'm hunting for the projects that have legs long term. So,
Yep.
what about you, Jake? Closing thoughts.
I mean, honestly, same exact thing. I wanted to very briefly show a little screenshot of what we're building at Metrics. We're building it from scratch at the end of the day, and we're really focusing on letting the portfolio move together. Just like with David's stuff, like he can track the liquidity pool sure on Metrics, but when it comes to visualizing the strategy with the hedges and everything like that, that's what we're paying attention to in this upgrade. Ideally January, February. Complete redesign, but also completely built from the ground up with that in mind. And we're basically, in other words, taking components from the best tools out there right now and in some sense splicing them together and becoming that bridge. So that way Metrics will be the only tool that you need to track your portfolio. And you'll be able to track your entire portfolio here. You'll be able to see exactly where your capital is on the traditional networks like EVMs and stuff, and then also Solana networks. And then another thing, if I could find it where it's at, is simulate. We're really redesigning this thing from the ground up, so that way, obviously, you can visualize the strategy, simulate a strategy, and truly become a strategy hub. So, hopefully, you guys enjoy that. I'll have some more updates on that in the Liquidity Syndicate, which is our free community. But yeah, take it away, David.
I have one question before we kick it to David for his final
Go ahead.
thoughts. Full range pools. When am I going to be able to see my full range pools?
V4, yeah. So part of what we're doing with this build from the ground up is once again thinking how can we become a strategy hub. Again, it doesn't make sense for us to support some aerodrome pools but not others. It doesn't make sense for us to support some Uniswap pools but not others. So part of V4 is branching out that support to all of these other chains and everything. And we will be taking on another developer pretty soon. As well, like another junior developer. I feel like at this point I'm just always hiring for developers. We're
That's a good
setting
thing.
up, we're setting up on luminaryassets.com. So if you guys are a developer, no one, luminaryassets.com will have a job post here pretty soon. We'll have a job board, which are basically just positions that we're always hiring for. You can submit it, and as soon as we're ready to bring somebody on board, we'll reach out to you. You'll be the first in the know. And yeah, so.
All right, David.
Yeah, sure. So, final thoughts. I never view crypto in a vacuum. So, whenever I'm looking at Bitcoin or Ethereum, I always view those assets through the lens of what I see going on in bond markets or in equities markets, and what I see in equities markets is the Mag 7 items. It would not surprise me to see them pull back a little bit. Um, so, yeah, do I think that the bottom is in for Bitcoin, for ETH, for other digital assets? I do not. And the reason why I don't think the bottom is in is because I expect that next week, Fed Chair Powell probably won't sound like an uber dove. So if he doesn't sound super dovish next Wednesday, then that would be a great catalyst for markets to sell off by a couple of percentage points. And you know what? I think that a small sell-off out of the S&P and the Nasdaq would probably mean that Bitcoin and Ethereum plumb their lows again. So, what am I doing with my portfolio positions? Well, I'm in a bunch of CLPs, Ethereum CLPs. I've hedged them, and I'm short. So maybe I'm talking my book a little bit here, but with
Well, I mean,
ETH,
I don't think it's talking your book. I mean, it's what you're doing, and what
yeah,
you're doing is matching what you're seeing.
I
So
put my money where my mouth
yeah,
is.
exactly.
Yeah.
I don't see that as a bad thing at all. But
No,
sorry, go
no, no. So yeah, I don't think that the bottom is in yet. it doesn't mean that we put in lower lows, not necessarily, but um, I think that we need more clarity around what QE will look like. And I think that's what people are going to be looking forward to next week from Fed Chair Powell. And I just don't expect to get clarity from him next week. So if the market wants to understand what he thinks QE is going to look like, but we don't get that information next week, I think markets move a little bit lower because of that. So, yeah, we'll see what happens. But I think Bitcoin will probably be the first asset class to sniff out like real QE. It looks like we're going to get it, but will it match the market's expectations though? Like if the market expects $20 billion a month of QE and we get 10, well, that would be a disappointment. I think markets would sell off because of something like that. So we'll see what happens. I maintain my shorts, and
Don't lose
hey,
your shorts.
yeah, no kidding. So the one thing though is that I've at least defined my risk. So I know exactly what I could potentially lose in percentage terms if I'm wrong and markets continue ripping higher. One last thing, you guys, have you
Go ahead.
guys been using Polymarket at all?
No.
Dude, I love it. I love Polymarket. It's so great. So there are these, they're called event markets on Polymarket. And some of them, the way that they're structured, they're options chains and they're binary options. So I've been trading binary options on Polymarket, man, and it's liquid. And I really, really like it. So maybe that's something we can talk about next week.
Yeah. No, absolutely. So before we go, we got, I think Victor, this is the one I was telling you about, Jake, before. I think he's a coder and was the one that was possibly interested in the position. He's a member of our community, so
There you go.
I can put you in contact if you so desire. And then tomorrow, our show, my co-host Jeff is actually flying in tomorrow,
Oh,
and so yeah, we'll be doing our. Oh, actually, not yeah. He's flying in tomorrow. Our Friday show. We'll be here at the cabin. We'll both be here in the same location, and we'll see if we can talk my brother Jason into getting on camera with us and for our crypto and chill. If you guys want to join us, you're more than welcome to. Basically, we just pour a couple of drinks, sit back, and sip on some cocktails and just talk about the markets for the week and what's going on and shoot the shit. It's actually kind of fun. But
That
you're
sounds
more
like
than
a
welcome
good
to join us.
time. That sounds like fun. Yeah.
does.
Yeah, like I said, I mean, you're more than welcome. Let me know and I'll send you an invite.
Sweet, man. I'd love to.
All right, cool. Sounds great. Well, as always, thank you, gentlemen. It's always a pleasure. I mean, none of this is, usually it's totally unscripted. We just kind of talk about whatever comes up. And honestly, it seems like we always get to the meat of, what's going on and, what needs to be talked about. So again, thank you. And until next time, Veteran Crypto out.
Peace.